For the way too kind introduction and for having me today here. So what I want to do now is kind of maybe not necessarily for this crowd, a somewhat kind of a big picture, but briefly kind of define what I mean by large language models along that way, use that then to kind of mention some potential challenges when you want to use large language models for finance research, but then also kind of promises, and then effectively move over to a concrete example where we've used large language models in some of our ongoing research, and in that context also highlight how we thought about kind of tackling some of the kind of challenges that I want to kind of briefly lay out at the beginning. And many of those concerns were certainly also already kind of addressed either during the talks or also the questions subsequently in the morning. So many of the things I'm now actually alluding to are not maybe too novel or deep insights at the beginning. So effectively what the way you can think of large language models, and this is also related to some of the work, for example, Heiner has been doing. Imagine you have a time series of financial data and you have some missing observations in between. So typically what you can do, you can just figure out maybe a way to potentially impute those missing data. And effectively, that's also what a large language model is doing. So it's a predictive model for sequential data. And so if there's some missing observation in between, we can maybe then ask my large language model, what that missing value would be. So Lars already alluded to the so-called top 5 and top 3 journals. So imagine you have 2 sentences now, and there is some missing data. So let's say, as researchers in missing, we often target the top 3 journals, or as researchers in missing, we often target the top 5 journals. If you're an economist, you would immediately know, okay, kind of what are the important kind of keywords to look at. It's top 3 or top 5. And so therefore for us it would kind of be natural to say, well, the first colleague of ours maybe works in the finance department, and the second colleague of ours maybe works in an econ department. Now, in that sense, attention is kind of key of figuring out what is the important word to focus on, into a kind of back out what potentially the missing word is. And that's effectively also what large language models are doing. We start out with kind of a vector representation of those sentences, and then we figure out what is now the important word to focus on, to pay attention to, and then we kind of do some optimization and reweight the different words based on the attention to kind of figure out what the missing word would be. That's effectively what we are doing. And so practically what that means, we have large neural networks with kind of billions of parameters. And then the nice feature of neural networks is that we can actually allow for intricate nonlinearities, interactions, and higher order terms, and then adjust the parameters to our specific forecasting task. What we then get as researchers is kind of an output that is actually comes with an estimated probability distribution. And many of the models we heard this morning allow us as researchers to effectively then fine-tune those algorithms to the specific kind of research question we want to actually apply it to. And so therefore, this is then often quite important. We saw that also in one of the talks this morning, do we want to take an off-the-shelf model, or do we want to allow potentially the model to be fine-tuned to our specific research question via reinforcement learning? And we already saw that potentially there are promises in pitfalls in using one or the other, and so I come back to that in a little bit. And so what are now kind of potential challenges when it comes from applying large language models to questions that are relevant for us as researchers in finance and economics. So something that came up in various shades and forms already in the questions this morning is the issue of replicability. So for us, if you submit your first paper and then kind of typically, unless you get super lucky, you will not immediately get an acceptance as is. which actually was my first publication. So we had this paper that you alluded to in the Journal of Financial Economics that it won the AQI Insight Award. There was still a PhD student, we submitted to the JFE, it was solicited first and then comes back like, okay, this paper has already so many robustness checks and a 100-page appendix, so like, would be unreasonably to ask for more, like, let's accept as is, and so like, as a PhD student, you're naive and you think kind of like, that's how publication works. Unfortunately, then in the following 10 years, you figure out that the standard response is okay, reject, and so like over time papers go longer and longer because you do kind of all those robustness checks, and it's like the second paper I worked on that took actually 8 years to get published, so 7 rejections later. Now the issue like with now using large language models in terms of economics and finance research is that we as researchers often actually do not know exactly what goes into them. And so like given kind of the large costs associated with kind of training those large language models, typically done by kind of deep-pocketed corporations. And so therefore like, already kind of on a more abstract level, you kind of might be concerned, given that we don't exactly know like which type of text goes into those models to train them, and we don't exactly maybe know how many billion parameters, what is exactly the infrastructure and so on, and so therefore like this raises the concern that we could potentially not replicate and fully understand exactly why we got a certain outcome, which of course then also means that referees that might actually kind of like want to understand why we now found potentially this new predictive variable for returns to kind of figure out like exactly like how can I now satisfy the referee if I myself actually don't exactly know what went into kind of the algorithm, and so therefore like this is a more question rather than a solution I'm proposing. Would it be potentially like beneficial to focus more on open source solution where you exactly know what's going on, and potentially you can also clearly disclose kind of exactly like potentially how you got the answer you got in your paper, or how should we deal with the idea that maybe there's a challenge to replication. The second potential challenge is like how should we evaluate the output we get from our large language model. So traditionally, like you would focus on like metrics like perplexities, like how well is now my large language models reproducing a certain secret in a language. Now, of course, that can be quite useful and beneficial. Now, for us, maybe in finance, it's less clear that it's kind of like a natural kind of benchmark. And so then we need to figure out what is now potentially a way for us to evaluate what my large language models is giving me. Now, I'm going to show you later like how we try to tackle that in one of our current ongoing working papers. You get an answer from ChatGPT and you want to somehow define a natural benchmark to get an idea, is this answer useful? Another challenge, this also came up already a few times this morning, is of course that, okay, now you look at kind of answers from ChatGPT that was fed lots of data, and then the question is, did ChatGPT know the future, and based on that make a certain prediction? And so like, can we really trade on that information? Can we actually, how should we interpret what we get? Is it kind of like, indeed something that could be implemented in real time, or is it like, it's useful, it's still interesting, we can find patterns in the data, but maybe we cannot actually make money out of that because in real time ChatGPT would have not had that very information. And so therefore like we need to discuss and think a little bit about more generally like what is the kind of now what we want to get from large language models, and how can we evaluate the output that we get from these models, and these in one specific context that where we used ChatGPT, I want to provide one potential kind of natural benchmark against which one can evaluate what we get from these models. Also came up already kind of multiple times this morning, like you ask ChatGPT something, and even though it might not know the answer, it might behave like an individual investor being very overconfident in his statements and trade kind of strongly on certain signals. So like, it might happen that you get a very kind of like an answer that sounds very authoritative, but then in the end, like, if you drill deeper, you figure out that it's fully made up, and so therefore, like, you need to think a little bit about kind of like, how to frame the prompt, and so this is of course also more kind of art rather than science, and maybe thinking about like how you can evaluate whether what you get is robust, whether there's potentially kind of variation across different prompts that you're asking, and so therefore, like, this goes back to our kind of points from earlier. So unless we really figure out and have kind of a sound understanding what our large language model is doing, in which case, of course, we could kind of like control or correct the potential outcomes. Like, it's ultimately a black box, and we need to kind of think about like how to deal with the answers. Now, another thing is given that it's kind of trained on the history of available knowledge, so like maybe it was totally fine to use certain words in certain language. Think about Jim Knopf and der Lokomotivführer. Now, if you kind of go into like kind of a Kinderbook store in the US, like they would have changed the language in the book, because nowadays it's no longer kind of maybe kind of the use of language that was used by Michael Ende at the time. We wouldn't use that anymore, but nevertheless, of course, if you have now an algorithm traits on certain text that have used this language, you could actually get potentially inappropriate kind of information, and then potentially there's also, of course, the concern of breaches to privacy, given that it might also have access to highly confidential and sensitive type of data. Of course, like we are here not because there are all those pitfalls and challenges, but of course clearly also it has huge kind of potential applications and use cases. And so like just in terms of like for us as finance researchers, oftentimes we're interested in kind of making predictions, so therefore like the ChatGPT and large language models of course have the power to actually be very, very helpful in kind of forecasting financial data. And so therefore like we need to think about whether we can actually not only use off-the-shelf large language models, but potentially fine-tune them to the specific knowledge we want it to be attuned to. For example, all the working papers on SSIM, and then kind of like maybe also feed into like the fact that maybe returns as a factor structure, and then kind of like see whether we can actually build on that. And this is also more a question rather than an answer. It's kind of figuring out whether kind of now pre-training, fine-tuning, and alignment, should we think about that as kind of complements, or are they substitutes? In which context should we actually kind of fine-tune along different dimensions? So therefore, like really kind of like I think for us, we need to think a bit about kind of how we want to now deal with those large language models to make them actually most useful for us as researchers. And this is also kind of like, shedding a little bit of light also some of the topics Hayden was already alluding to. So like of course like, using like of a natural language process and has a long history in finance, like 20 years since maybe dictionary-based approaches have been used. And so therefore like, they are of course very useful, but of course then, nowadays people use still the Look and McDonald type of dictionary in a very different context relative to what it was originally kind of invented for. And then you have to ask yourself, is this now the best we can do? Or maybe indeed are there kind of now promises and use cases for using large language models? One of the reasons why those dictionary-based approaches are still actually quite common and they're useful, because there's of course way easier to figure out why a certain kind of answer was kind of derived relative to maybe using now ChatGPT. We maybe also have a better idea about the statistical properties. It's easier to interpret. It's more tangible, and like given that academic referees oftentimes tend to be, let's call it maybe structurally conservative, like, there's oftentimes like a little bit of an uphill battle you have to fight if you want to use new methods. That's maybe why potentially these type of more kind of traditional approaches can be useful. But of course, like, there's always kind of a little bit of a back and forth between, like, it's maybe cheaper, it's maybe kind of more interpretable versus like maybe it's kind of just outdated kind of dictionaries and methods we are using. So like, it's a fine trade-off, and at the end of the day, the specific research question we want to kind of tackle determines like, what we should use. I don't think there is a clear answer that you should always use one or always the other. It's ultimately like, you need to figure out what is most useful for the research questions at hand. And so like, if you just want to see like, kind of like, what are kind of like, let's say, even like on a day-to-day basis, applications and uses of large language models. Like when I was flying to the Western Finance conference from Frankfurt last week, I kind of lost my connection in San Francisco, and I needed to call my global services kind of ambassador. And so like, she immediately booked me in a hotel on a new flight. It was pretty smoothless. So one way to you can think about, like, in your daily life as a researcher, like large language models can be kind of like your 24 hours research concierge that allows you to kind of like handle many kind of small scale things that maybe might not be efficient to kind of email your research assistant for, because like, till you write the email, it's kind of maybe more time already than it would take to kind of figure out what's going on. So like, therefore, like, pretty much along all stages of the research process, from idea generation to kind of, get an idea whether people have already worked on the topic, literature review, even just like, for me as a non-native speaker, kind of like checking kind of language I'm writing, translating text, but also like, maybe you've now worked extensively using Denis, and then you maybe want to use a kind of different language. So like those type of things, it's really, really useful. And ultimately, of course, then also like, sometimes like say, well, here's now a paper, create me like 30 minutes presentation. It's even like pretty good in kind of like doing at least the first sketch or bare bones version of your presentation. And so like, with that kind of like as a little groundwork, what I now want to do is kind of talk concretely about like one case where we've used ChatGPT ourselves in a research project, and then kind of tell you at least the way we, together with Manish, Qianlang, and Bao Song, thought about tackling some of these challenges that I was just alluding to, and why we thought actually ChatGPT can be useful. So the promises part of the title in this specific research application. And so like, shouldn't be like me just talking. So like, whenever you have questions, just feel free to like, interrupt me, and then we can maybe also have a bit of a discussion. Okay, so like specifically what we try to do is to kind of get an idea whether we can kind of extract based on text data a predictor for future investment. So like, if you're familiar with this kind of Q theory of investment, it would tell me like, there's this efficient statistic under a certain assumption, that's Q. Ideally you would have marginal Q, and then all you need to know to predict investment at the firm level would be marginal Q. Now, investment, of course, could be quite interesting to understand better, because on the one hand, it's like one of the most fundamental questions firms undertake. It's maybe kind of key for economic innovation, but crucially also, of course, like if you look at it, it's the most volatile component of aggregate GDP, and so therefore, like if you can predict GDP, you can, if you predict investment, you can maybe even predict kind of economic downturns, economic recoveries, and so on. Now Q, oftentimes, we use in one way or another some form of market-to-book type ratio to get a proxy for marginal Q, and so therefore, like, you could say, well, to the extent markets are efficient, kind of have all available information, maybe Q might be a good predictor. But of course, you could say, well, maybe like management and CFOs, maybe they have some private information, and so like information that's not yet fully incorporated in market prices. And maybe if you are able to look at their mouth, what they say, maybe you can extract some piece of incremental predictive power for future firm investment. It's like one way to potentially look at kind of the horse mouth is like what Michael was alluding to. So maybe you can actually look at text based on earnings calls where the CFO discusses with analysts and other financial market participants like the current financial numbers, but then also providing an outlook about the future and among other things also potentially talking about firm investment. Now, as Michael was saying, like, you have those quarterly calls for many thousands of firms. You have like typically on average like 8,000 words in those kind of earnings calls, and so therefore like manually reading all of those earnings calls might be already quite challenging. Then of course you could say, well, maybe we can use a dictionary-based approach to come up with some form of sentiment. But then again, like we are not interested in a generic sentiment. Is now the CFO optimistic or pessimistic? But is it the case that the firm wants to maybe invest more or maybe invest less? And so therefore we want to kind of now piggyback on the advancements of new developments, and specifically ChatGPT in our case, to see whether if you feed in the text of those earnings announcements, can we actually come up with a prompt to back out based on the text using ChatGPT as a tool, what the manager wants to convey to analysts, what they plan to do when it comes to future investment. That's kind of like what we want to tackle in that. So specifically, like we want to ask 3 questions, like can ChatGPT kind of in general and specifically to investment kind of help us understand corporate policies, whether the information we can get is actually new information over and above standard predictors of firm investment, like Q, variations of Q, and other kind of maybe proxies for financial constraints or lack thereof, like cash flows and so on. And finally, also whether this information, given that we argue that maybe it's private information of the manager, whether it then subsequently helps us to predict stock returns, and you should maybe then already kind of many red flags should go on, like predicting stock returns, given that you maybe have the future data, so like I want to come back to potentially find a way how you can potentially still convince, hopefully at some point, referees that maybe that's indeed meaningful information.
Yeah, I'm just curious, how did you kind of conclude that earnings calls will be the best source for this as opposed to reports and other this kind of disclosure?
No, totally. So like, what we thought in terms of like which corpus of text to look at, it's like, it should be a way, if it's really based on private information of the manager, that it should be disclosure or conveying the information to like market participants. You could say, well, maybe like even like in kind of 10Ks, part of the information could be conveyed. But as you also alluded to earlier, like 10Ks are way more structured. And it's kind of given by effectively like GAAP or IFRS kind of rulings what you need to disclose, and many times it's also very scripted and goes multiple times through the lawyers of the firm, kind of what you can discuss and disclose, the way it's discussed. Then you have potentially also like consultants that you hire that actually write that part for you, just to make sure exposed you are not subject to lawsuits and litigation. Whereas like in a call with kind of analysts, it's less scripted and potentially more informative in that sense.
So in these earnings calls, oftentimes the analysts themselves will prompt the CEO or CFO for questions, but I mean, one would assume that it would only ask questions on which there was some level of uncertainty. I mean, if it was something that was fairly obvious, even if it's not written anywhere else, it wouldn't hurt them, right? As a question. So, I mean, just one question: if this is also dealt with in the research, and another one is, I recall even some 10 years ago when people like were discussing the history of using email in early presentations. Some of the snappier CEOs and CFOs, they started changing the very words they were using to account for potentially effect on prices from traders using these models. So also, if there's any adjustment for that as well, or maybe even anything such as a time-based effect.
So like the first part is like, and we haven't actually done that yet, so what we could do is actually separate the part that is part of more like, the opening type statements by the CFO, which is fully kind of driven by like a supply of information, I would think, whereas like the part that comes from the Q&A part, I think that would allow us to potentially separate kind of like, is it coming maybe, it's more uncertain and so like that's driving it. What I showed you later actually is, however, part of I think you're totally spot on in the sense that we find evidence that for firms where there's maybe more uncertainty, you see larger kind of predictive power, so this would go in the direction, but I think it would still be interesting in separating. And so like my co-author Bao Song actually has some work where actually kind of, the title is like how to talk when machines are listening, to kind of directly take into account like, do I now change language because I know that ultimately it will be fed potentially into like large language models. And so like, if it's really the manager who kind of has some private information, you think it's good information, wants to convey it to the market, maybe then they make it even more salient and streamline it, we capture it even more easily. I wouldn't know exactly now how I would actually try to identify that, but certainly looking at different sub-periods could be potentially and one way to see whether, like maybe in the early part of the sample, when no one thought about kind of that those type of tools could be available at some point, versus now that would be maybe one way indeed.
And just a very brief follow-up question is, when you have a new management coming in, it will sometimes reveal information about the prior management because they want to set expectations for their tenure. Right? So if it's not currently included, then maybe potentially also adjusting for the tenure of the management, or for example, when Tim Cook came in Apple, he had a lot to prove. And at the same time, he wanted to set expectations correctly. So as opposed to Steve Jobs last.
No, totally. So like, I would have to think a little bit now how this could potentially interfere with kind of what we are looking at in terms of like predictive power for investment, but definitely like you're totally correct that, oftentimes the new leadership wants to clean up and maybe in fact actually kind of make tough decisions early on, because then they can blame the previous management and subsequently then get all the glory for like, the kind of more kind of, I guess, painful layoffs and stuff like that. But no, definitely, yes, we could. So far, we haven't actually looked at kind of turnover in terms of like management turnover. But yes.
Also going to tenure of management, would you expect that the more material you have on a specific manager, the more you will be able to infer from what they're saying and how they're saying it? And so, somewhat going to the other direction, that the longer somebody has been holding these Q&As or earnings calls, the more you can interpret what they're saying.
So if I was like, as of now, we actually don't really kind of fine-tune what our algorithm to now the specific texts we are using. So we take off-the-shelf ChatGPT, but to the extent I would want to kind of squeeze out as much as possible, then you would indeed, as you say, like, the more kind of text you can feed in based on the type of words, language a certain manager is using, the more good you will get out of it, I definitely think so. But then of course, like, it's also partially in this goes back to also some of the discussions this morning, like almost like the Lucas type critique. So if now the manager knows that there's more language out there based on which now the algorithm was kind of trained, and maybe you want to kind of either camouflage or feed certain information, you might change your language. So in that sense, kind of like, it's also, I guess, like back and forth between like what you can learn based on spoken language relative to kind of what you feed into it. Okay, so like, just to give you an idea, like the reason why we wrote the paper is like, in the end of the day, if you kind of, and I show you now in the second how we created that, look at an average investment score that ChatGPT was creating based on those earnings calls. This is like the left y-axis, and subsequently realized capex or changes in capital expenditure. On the y-axis for the average firm, you do actually see that the two of them line up. Current ChatGPT investment score and future investment are somewhat aligned, so somehow it seems like that ChatGPT might be able to extract useful information, but again, as we discussed many times now, maybe it's just given that it knows exposed to data, that's why this figure looks so nicely. Okay, so like let me instead of now talking about the main results, first directly tell you a little bit about kind of the data we are using. So we use the transcripts of all earnings calls from Seeking Alpha. Now I mentioned earlier that you have to think a little bit about what is kind of the benchmark against which you want to evaluate the outcome of your large language model. And so in our case, there was a quite natural benchmark, and this was actually what CFOs expressed themselves in a survey. And so here we use the Duke CFO survey by Graham and Harvey, the microdata, where you have like for firms, quarterly, what the CFO states in the survey, the way they plan to change their capital expenditure, and then other than that, standard data sources. In total, we have like a little bit less than 4,000 unique firms, and the sample, given the availability of the transcripts from Seeking Alpha, starts in 2006 and ends in 2020. Okay, so like I told you earlier, like at the end of the day, designing a prompt is also maybe more kind of art than an actual science. Like what we try to do is to say, well, very specifically, like you have getting fed company earnings call. Think about you being a finance expert. Now, based on this text only, please answer whether kind of you think this firm plans to change its capital expenditure over the next 12 months. There are 5 answer choices: increase a lot, increase, no change, decrease or decrease substantially. It's like oftentimes similar to like what you would see in an E4 kind of investment survey, or like the standard questions by the European Commission. And then please choose one of the 5 choices and also provide a brief justification. And the format of the answer should be choice and explanation. And if no relevant information is provided, please state it. And so and then we feed in the earnings transcripts. Now, we actually tell you, so at the time when we wrote the paper, this was what was available. We used ChatGPT 3.5. I also think it's still useful to use ChatGPT 3.5 in our specific case, because then we can actually do like what I refer to later as an out-of-sample exercise. We then actually numerically kind of assign scores from -1 to +1 for the 5 different answers. And then in the baseline analysis, we just use the average of like the scores, because we kind of use like the text that on average have like roughly like 8,000 words. In average, we put them in different chunks of 2,500 words, we feed them in, and then we take the average of the scores assigned to the individual chunks, and I'll discuss later a little bit that actually in fact we can also use different aggregation methods. Like, yes?
You somehow take into account that a certain chunk might not discuss investment at all?
That's exactly what you see. Like, most of the chunks don't actually discuss investments.
Okay, but it says no change. It could still discuss investment. Let's say I can imagine saying we're going to keep investing at the current levels.
So like for us, it's like we have to do something. We have like 0 would be like no change, and we have separately no information is provided, which in the baseline we also assign a 0.
So you don't keep that separate?
No, as of in the baseline we don't keep those 2 separate. So like no change would here be, maybe it's a little misclassified. That's also explicitly no change or no information is provided. And then like you see for the other cases, roughly symmetrically, it's an increase or a decrease, but of course, like if it's an earnings call, most of the discussion will be about earnings, outlook for earnings, and some parts of the discussion will be about capital expenditure.
So do you have a sense of like how much of that 76% is no information versus actual information but no change?
So like it is, if you look at individual text chunks, it will be like, I would say, more than 80% is just no information for that specific chunk. Like most of it is coming from the fact that they discuss earnings and other things. That's also why one of the other measures, we look at the largest absolute value that is assigned across chunks at the firm quarter level, you effectively get around that. Okay, so like the first way to potentially then say, well, actually, is it meaningful what ChatGPT tells us? So we look at all non-zero text chunks, meaning like ChatGPT thinks that there is some meaningful information about future investment. Then just, take this chunk, look at kind of bigrams and get an idea like, what are kind of the word combination that the manager is using in those text chunks. And if you look at now kind of the bigrams associated with low investment score, you see like cost reduction, operating expenses, cost structure, cost savings. Seems like a firm that somehow maybe plans to downsize or kind of tighten the belt, whereas actually if you look at firms where ChatGPT tells us actually it wants to increase investment, then you see like, capital expenditure, revenue growth again, kind of capital invest. So like, at least intuitively it seems to make sense that, in text where maybe us as human readers, they would also say that seems to be a firm that wants to grow. Indeed, ChatGPT seems to be assigning a high investment score and vice versa for low investment scores.
Sure, thanks. I think that's very interesting. One thing that's true to me is that most of these concepts, they're actually observable, right, from the quarterly statements. So, do you think perhaps an exercise to see whether the earnings calls have new information or unobserved information would be to have, let's say, the unexpected portion of CapEx explained by this. Because, for example, a revenue growth or maybe not growth opportunity, but kind of a cash flow metrics and revenue. This is I have the time series both for the company, for the industry as a whole.
No, totally. So like later in our kind of like predictive regressions, we always have the most recent quarterly financial variables that the literature would typically use to predict investments in there. To the extent it would just be hard numbers that should be captured. We also have like the earnings surprise, for example, that is coming out of those earnings calls, kind of in the regressions. And there's like, we try to kind of keep constant like hard numbers, backward-looking information. I think like if I look at those diagrams, it's more soft, forward-looking information. But definitely like, there's part of the information you might be able to get from also 10Ks.
Do you find any occurrences where one chunk for one firm is talking about an increase in investment and then the next is talking about a decrease? Does that ever happen?
So it happens, but if you look at the occurrence, it's kind of out of the thousands of firm quarter observations for like a handful of cases.
And do you know anything about the timing of the investments? Are you always referring it to the next quarter, or do they sometimes also talk about, I don't know, we're growing over the next 10 years or whatever?
So like, we asked ChatGPT over the next 12 months, what I'll show you later, is the predictive power actually seems to be there for up to 9 quarters ahead. And so the way I would actually think about that is like, if it's just kind of like a little replacement investment, that's maybe not worth it, then you could finish that in the next 12 months. I wouldn't maybe, if I were CFO, talk about that in the earnings call. What I want to talk about is maybe, I'm now building a big new kind of planned at Infineon outside of Dresden, like a multi-year investment project rather than the small replacement. That's maybe why you see like the long-term predictive. Okay, so like then here's just again like just some example where you directly see in the text what the manager is talking about. So let me not just state here. So like another way just to see kind of like is that least meaningful across industry and over time variation in the average investment score that you see in the data. And if you look at the kind of Great Recession, retail, wholesale, we saw kind of people tighten their belt, they don't want to invest. You see during the COVID-19 pandemic, like biotech, for example, has a very positive investment score, like at least meaningful variation across industries, over time. But again, like, I wouldn't be concerned that the referee would say, well, of course, they just know what happened, and so that's what you see here. So therefore, like, another way potentially of validating what ChatGPT is telling us in our specific case, and remember I argued that maybe it's useful to think against like how you want to evaluate like the outcome specifically for your research question. In our case, we thought that it could be useful to directly compare to what managers are thinking in the Duke CFO survey. Now, of course, like if we had like a Duke CFO survey for all firms in all quarters, we wouldn't need to kind of ask ChatGPT. Unfortunately, it's only like a few hundred firms that kind of Graham and Harvey had started asking, and now the Atlanta and the Richmond Fed actually are continuing the survey. But so like one of the questions in the survey is like relative to the past 12 months, does your company plan to change? And then there's a sequence of potential variables, including capital spending, like change by a certain percent. And so we have for 1,700 firm quarters that we can match to the conference call data directly the answers from the Duke CFO survey. And then like a simple kind of like non-parametric way, so you portfolio sort in like the different firm quarters for which you have an overlap into kind of like portfolios where you have very low to very high ChatGPT investment score. Just look at the average kind of answer of the CFOs. And what you see here, like when ChatGPT thinks actually like, that's a very negative investment score, you see the average manager also forecasts a reduction of investment by around 8 percentage points, whereas like, for ChatGPT investment score firms with the most positive score, they actually want to expand investment by more than 10.
So how concerned are you about this category where ChatGPT says no change, but it's actually like +7 or 8%?
This could be potentially that it's kind of like replacement investments, like...
Not very. Not very concerned.
If I could create the data myself, maybe I would wish to come out slightly differently, but this could like just regular kind of, you have like amortization, depreciation, you're just gonna replace kind of the capital stock based on what was kind of washed off last year. But definitely like, it's not too simple. And here it's just like, to give you an idea, like, for a small kind of subset, like picked 20 conference calls that had positive or negative average scores. Prompt 1 is kind of what we got with our prompt that I showed you earlier. And just like for today, like, we had an alternative set of like 9 different prompts. And you see like indeed if you kind of remove certain words or certain sentences from your initial prompt, you might actually get different type of answers. So like the last one, prompt 10, just to give you an idea, like this is a bare bones prompt. We don't tell ChatGPT to be a finance expert, not to focus only on that text, and so on. So like just simply like, here's a kind of a text, do you think the firm invests more, the same or less? And what do you get? You do see that indeed the answer can actually differ quite markedly, where our standard prompt, for example, thinks that it's an expansion investment, you might get a contraction and vice versa, but overall you still see some stability there. And so like what we have done in the paper is actually for like 10% of our like 74,000 per quarter sample of calls, just redo it again, just verify like our baseline analysis doesn't actually change if you actually just redone the same prompt, the same transcripts, do you get different answers. So now let me just tell you a little bit about some of the kind of basic results, and along the way again kind of discuss a little bit how we try to tackle and address some of the challenges I was alluding to earlier. So like now what we want to do is to say, well, does this ChatGPT investment score help us incrementally predict investment if you kind of use standard predictors, like standard Q, or maybe like in the Q often is subject to measurement error, use kind of like some measurement corrected Q, use maybe a kind of extended Q in which you allow for intangible investments a la Peters and Taylor, but then of course also potentially proxies for financial constraints and so on, and then see whether ChatGPT has some incremental information. So like now what we're doing, we request CapEx in like the quarter subsequent to like the quarter during which the earnings call is made. So like we have now the quarter, let's say ending end of June, then early July, we have now our earnings call, and then like we use the quarter that starts in October to look at CapEx after October relative to before, and so like we requested on our investment score, Q, lagged capital expenditure, and firm, time fixed effect, and potential other controls depending on specification, and clustering standard errors at the firm level. And so like what you see here is like our ChatGPT investment score is positively correlated with subsequent capital expenditure in terms of like magnitude, like one standard deviation increase in this investment score increases kind of CapEx by 3 to 5% of a standard deviation. Is this a lot or not? So like if you think that maybe Q should be like maybe the strongest predictor of investment, it's roughly like between 2/3 and almost 100% of like the predictive power of Q for future investment, and so in that sense, I think it's actually meaningful economic.
Have you ever looked into the subsample for which you also observe the CFO survey and see if your investment score adds any value above and beyond that?
We do, and you find actually that in terms of like economic prediction, it's pretty close to our baseline here. It's not statistically significant, and that's just because you have 1,700 rather than 74,000 observations. Like even like the Duke CFO survey is actually barely significant, even though it's even targeted specifically at that.
Yeah, but I mean, it would be cool, right? If the CFO survey kind of drives out your predictability, you could maybe argue, okay, it's kind of measuring something very similar, which probably is.
Yeah, no, exactly. And like we do have this table in the papers, like it's maybe still significant. I think maybe at the 10% our ChatGPT investment score. But then like there we only use industry fixed effects, because then if you use firm fixed effects, like no variation is left in a small sample, and then like people are complaining about that. Okay, so like this goes back to the discussion with Michael. So like you see here like the baseline was kind of like starting the quarter after the earnings call is made, but then you see like up to another kind of 10 quarters after, slowly this predictive power it's slightly building up, but then goes back to 0 and then loses actually predictive power. And the way I would think about kind of like the fact that you have predictive power for more than 12 months, what we actually ask in the prompt is because like many of those large scale investment packages, they will just be multi-year expansions in the firm spend on that. Here it's just showing that it's not purely kind of only contained to kind of total capex, but also if you look at different subcomponents. If I want to kind of maybe predict, let's say, R&D or intangible investment, where you see the predictive power is weakest. Remember, like in the prompt, we asked for overall capital spending. I would adjust the prompt to directly look maybe at R&D expenditure, but this was just to see, is it maybe stronger for kind of subcomponents of investments where you would expect a stronger association, and that seems to be borne out. Okay, so like the way kind of like a Q-type theory of investment typically works is like, if you now look at current market valuations, let's say if your market cap is very high relative to fundamentals, this means your expected future discount rate is low, and so therefore the manager then uses a low hurdle rate for investment, starts investing a lot. That's kind of like the idea. Now, if it's really the case that the investment score is actually providing new information that is not yet in market prices, because maybe it's private information, then you would expect to see that it also helps us predict low future returns. That's kind of the idea of kind of like an investment factor in like your 5-factor Farmer-French model, or like in the Q-factor model, a la Lusang and co-authors. And so like, let's actually see whether kind of we can predict future realized returns based on this investment score. But again, like, big red flag here, like maybe ChatGPT uses future return information, even though it's prompted to only use the current text, and it's prompted to give information about investment, but maybe it read Hayashi and knows that there's this inverse relationship. And so like what you see here is like indeed kind of higher ChatGPT investment score is predicting lower future returns, and that's also like over and above kind of the standard factors that wouldn't have yet the information that ChatGPT is extracting based on the earnings call. And here it's just, instead of looking now at long-term returns, you can also think about the flip side. If now this investment score is indeed signaling lower future expected returns, it would mean that on the flip side, current market valuations should go up, so like short-term returns should be positive. So like if you look at the very narrow event window around the earnings announcement call, can your ChatGPT investment score actually positively predict announcement returns? And that's kind of what you see here, like in a narrow event window, if you look at cumulative abnormal returns around the earnings call, you do see that higher ChatGPT investment score firms have positive announcement returns, and this now goes back to the discussion we just had. So here, like, you want to condition also on like the earnings surprise in that call, but also on the sentiment. Is like the CFO more positive or more negative? They keep it constant, you still see that the ChatGPT investment score has predictive power. Now, a similar topic we were discussing is it like, supply of information versus demand. Is the demand maybe stronger for more uncertain firms? I guess you could also say, if you operate in a more uncertain environment and you're concerned that maybe the market doesn't have a good clue, you could also supply more information. Then this idea of maybe separating kind of the management discussion from like the Q&A part indeed would be quite meaningful. But so like what we now want to figure out is whether kind of like the association between capex and this investment score varies depending on whether you are kind of maybe a more opaque firm, like a smaller firm, whether you are maybe in more competitive industries, and whether you are in early stages of your life cycle, either for the product or for the company. And so like what we do here is kind of like our baseline regression, but this time like enriching it with additional interaction terms. So like what you see here, if you're a firm that operates in kind of less concentrated industries, like more competitive industries, you see like the effect is the predictive association is stronger. If you're like a smaller firm, the correlation is stronger. And then the last two columns, if you look at kind of this Hoberg's and Maximovich type of measures of where you are in terms of product or in the innovation cycle of your firm. This is like life cycle 1 and life cycle 2. You see like a stronger correlation here, whereas like if you are in the declining or mature phases like life 3 and 4, it doesn't seem to matter. So indeed, like, maybe more uncertain, more competitive type of industries, and if you're like early on in your product life cycle, whereas compared to like cash cow, where there's no uncertainty, you know exactly what a certain firm is doing, so that there's less predictive power. Okay, so then another kind of way of potentially verifying what ChatGPT is giving us, whether this indeed captures what we think it should capture. Like, for us as researchers, where we would have to kind of read 74,000 earnings call statements and then manually classify, is it now about higher or lower capex? Now for analysts, it's something different. They're anyway in the call. They're specialized in certain industries, or maybe even specialized in certain firms within the industry. And of course, it's their job to kind of listen to the statements and then make forecasts for those firms. And so can we now see that analysts, after the specific earnings calls, update their forecast for future capex relative to the same analysts before? Like, look at changes in analyst forecast around the earnings call in the quarter afterwards relative to the quarter before, and can we see that our ChatGPT investment score indeed is predicting changes in analyst forecast for capex, and actually indeed you do see that, it's maybe not kind of fully artificial, but we are capturing in the sense that you do see like it captures what analysts can also extract from that specific earnings call. And this is now going kind of like addressing the last couple of minutes. I think we must have like a couple of challenges and how to potentially be thought of dealing with that. So like I mentioned earlier, we use ChatGPT 3.5, where we know exactly when the text it was fed is ending, and so therefore what we do and what we now here call out of sample test, we only use earnings calls that were done after the training data of ChatGPT 3.5. Here again, like you see, is way smaller n. But what you see here is like, even in text data that is not using or was not used as a training sample for our ChatGPT version we are using, you see that you can still extract meaningful information and then still predict future capex. So in that sense, it's not purely using forward-looking information. We can be sure because that's information ChatGPT didn't have yet. An alternative way of getting at that, and so we did that for a 10% random subsample. That's why maybe like there were some less stars in some specifications. But what we did, we took the earnings call corpus and just extracted any identifiable information. So take out firm names, manager names, product names, and all of that. And now, maybe you could still think that ChatGPT could potentially back out based on the specific text which firm it is. But I think, at least kind of to removing that concern a little bit more. You still see, once you remove kind of the identifiable information, ChatGPT investment scores for this random 10% subsample of our overall sample. If you look at kind of the baseline correlation in terms of economic magnitudes, it's almost identical. So it doesn't seem to be using the identifiable information to come up with a forecast. And then, I mentioned alternative scores, alternative large language models. So, I think pretty much out of time. Let me stop here and then see whether there are some more questions.